Eric Wade claims to know the best AI stock, and this company makes the software that companies like NVIDIA, Intel, and AMD rely on to design and test the advanced chips fueling the AI revolution. I reveal this stock so you don't have to buy Wade's newsletter. Just understand no paid or proprietary info is given away in this video, and it's all guesswork based on clues in Eric Wade's publicly available sales presentation. Before we do anything, let's look at some recent publicly available stock picks from Wade to see if he's trustworthy. Wade made 4 recommendations in January 2021, and the first was Bitcoin. It's been up and down since then, but right now it's tripled. The second recommendation was Amazon, and while the stock is up overall, it's trailing the market in the same time period. The third stock was Alphabet, and this stock has done well. The fourth stock recommended in January 2021 was Adobe, and this stock has not done well since. Wade recommended UiPath in January 2024, and this stock has done really badly and lost half of its value. He recommended the crypto Hedera in February 2024, and this asset has doubled since then. Here's the clues Wade left for us in his publicly available sales presentation so we can figure out the stock. The first we covered in the intro, and it's the company makes the software that companies like NVIDIA, Intel, and AMD rely on to design and test the advanced chips fueling the AI revolution. Next, he says, this company is at the forefront of AI-powered chip design, helping power everything from self-driving cars and AI robots to the smart appliances in your home. Third is 9 of the world's top 10 chip makers, along with Volvo, Mercedes-Benz, Samsung, and Sony, are its customers. And finally, Wade says, right now, shares have pulled back due to a major acquisition, but most investors are missing the bigger picture. This deal is set to be a massive tailwind, positioning the company to dominate as global demand for AI chips surges. I'm going to reveal the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPix. I reviewed over 100 stock picking services, and AlphaPix performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPix. So go ahead and click that link and take advantage of this amazing deal. The stock being pitched here is Synopsys, and the ticker is SNPS. If you appreciate me figuring out the stock and revealing it for you, just drop a like and subscribe for more videos like this one. Let's look at what Synopsys does. Synopsys is a leader in electronic design automation, EDA. Basically, software tools and IP that chip engineers use to design and test microchips. Think of it this way. If making a semiconductor is like building a house, companies like Intel or Apple are the construction crews, and Synopsys provides the blueprints and power tools. Its tools are mission critical. 99% of the time, if someone's designing an advanced chip, Synopsys or its rival Cadence is involved. It's a duopoly market, meaning Synopsys and Cadence design systems dominate the space, giving them a wide moat. Major players like AMD, NVIDIA, and even Google, for its in-house chip projects, all rely on Synopsys software. This entrenched position means Synopsys enjoys high margins and recurring revenue from multi-year licensing deals. The company's revenue is largely subscription-based, making it more predictable. Synopsys is the picks and shovels supplier in the semiconductor gold rush, profiting as long as chip innovation continues. In January 2024, Synopsys announced its intention to acquire Ansys in a cash and stock transaction valued at approximately $35 billion. The merger aims to combine Synopsys' strengths in electronic design automation, EDA, with Ansys's capabilities in simulation and analysis, creating a leader in silicon-to-systems design solutions. This integration is expected to address the increasing complexity in chip and system design, particularly in sectors like automotive, aerospace, and industrial applications. Let's look at the financial health of the company now. First is revenue growth is strong and steady. Synopsys reported fiscal year 2024 revenue of $6.2 billion, up 5.4% year over year, driven by demand for AI and automotive chip design tools. Despite macroeconomic headwinds, the company's subscription-based model ensures stable, recurring revenue, with guidance for fiscal year 2025 projecting 11 to 12% growth to approximately $6.9 to $7.0 billion. Second is profitability. Margins under pressure but resilient. Non-GAAP operating margin for fiscal year 2024 was 37.1%, slightly down due to increased R&D and acquisition-related costs. Net income, non-GAAP, grew to $1.5 billion with EPS of 9.94, and FY 2025 EPS guidance of 10.47 to 10.62 signals confidence in sustained profitability despite Ansys deal expense. Third is cash flow, a cash-generating machine. Operating cash flow reached $1.7 billion in fiscal year 2024, supporting $639 million in stock repurchases and $560 million in capital expenditures. With $1.9 billion in cash and equivalents, Synopsys maintains strong liquidity to fund growth and navigate the $35 billion Ansys acquisition. Fourth is debt and leverage, manageable but elevated. Total debt stood at $1.8 billion, with a debt-to-equity ratio of 0.15, reflecting low leverage. However, the Ansys acquisition, partially debt-financed, may increase leverage in 2025, though Synopsys' cash flow strength mitigates risks. Fifth is balance sheet, solid foundation. Synopsys' total assets grew to $10.3 billion, with shareholders' equity at $6.1 billion, underscoring a robust balance sheet. The company's asset base supports innovation and strategic moves like the Ansys deal, expected to close in 2025. To sum things up, Synopsys shows strong financial health with steady revenue growth, solid cash flow, and a strong balance sheet. While the Ansys acquisition brings short-term risks, its EDA leadership, R&D investment, and AI-driven demand support long-term growth. Investors should watch integration and macro trends, but Synopsys remains a powerhouse in semiconductor design. Here are the top 5 risks an investor should consider. First is Ansys acquisition integration. Merging two large, complex companies creates risks around cultural clashes, customer retention, and operational execution, which could drag on Synopsys margins and growth if mismanaged. Second is customer concentration. A significant portion of Synopsys' revenue comes from a few major chip makers, meaning losing a key client could have an outsized impact on financial results. Third is macroeconomic sensitivity. Semiconductor and tech spending tends to be cyclical, so a broader economic slowdown could delay customer projects and pressure Synopsys growth. Fourth is geopolitical tensions. Restrictions on selling software to Chinese firms and other geopolitical conflicts could limit Synopsys' ability to expand in key international markets. Fifth is competition and technological shifts. Rapid advances in chip design technology and AI tools could erode Synopsys' leadership if competitors innovate faster or offer more cost-effective solutions. And here are the top 5 opportunities for this company. First is AI-driven EDA leadership. Synopsys AI, the industry's first AI-powered electronic design automation EDA suite, automates complex chip design tasks, enhancing productivity and accelerating time to market for semiconductor companies. Second is Ansys acquisition synergies. The planned $35 billion acquisition of Ansys is set to expand Synopsys' capabilities into simulation and analysis software, broadening its reach into industries like automotive, aerospace, and industrial sectors. Third is growing demand from system companies. Companies such as Amazon, Google, and Apple are increasingly designing their own chips, driving demand for Synopsys' design tools and IP solutions. Fourth is expanding EDA market. The global EDA market is projected to grow at a compound annual growth rate, CAGR, of 9.35%, reaching $32.75 billion by 2032, providing a favorable environment for Synopsys' growth. Fifth is strong customer retention and IP portfolio. Synopsys boasts near-perfect customer retention rates and a broad proprietary IP portfolio, positioning it to capitalize on the increasing complexity of chip designs and the need for integrated solutions. So do I think this stock is a buy? I do. Synopsys is one of those companies that's essential to the semiconductor and AI sectors. These sectors might be cyclical and demand might fluctuate, but I think most people agree chips and AI are only going to grow from here. Synopsys is one of 2 companies that does what it does, and the market is worth tens of billions. The stock has a much better valuation today than it did last year, and it has typically done well after pullbacks. While risks do exist, I think the opportunities outweigh the risks on this one. Also, Seeking Alpha is having a spring sale for their premium stock analysis tool. If you sign up today, you can get it for a week free, get a $30 discount on the yearly, and get their next stock pick from Alpha Picks for free. Click the link in the description to check it out.